Hello, Oracles. Well, Tesla stock has been on a dead cat bounce downward trend for about the last 3 weeks. This is something we've been talking about on the channel for the last week or so, just kind of following the chart saying, looks like a dead cat bounce, expecting to see, if we were going to break up above certain levels. We never did. So we will confirm that today. I'll go over the charts with you guys and show you that, show you the downward trend that we're on. We'll go over the gaps again that are below us, just in case you guys haven't seen the video before where I went over all the gaps, and we'll kind of re-go over all of that today to show you guys which way we're going, because that's one of the things to pay attention to, especially as somebody who's very bullish on the stock. I am very bullish on the stock and the company myself, but I'm a long-term bull. And there's a video I'm going to be making over the weekend. I'll probably end up putting it out next week, kind of breaking down the difference between the bulls and the perma bulls and why they kind of butt heads sometimes. It's kind of crazy to think that two people who are bullish on a company are butting heads, but it happens a lot. And I think in Tesla stock, at least in my experience, I've never seen it as bad as it is in Tesla stock as I've seen it in other companies. So we'll discuss that next week. But this is something to pay attention to. And some of the perma bulls just get frustrated about the fact that it's happening because they don't think it should be. But again, we'll discuss that next week. But we'll go over the charts today, show you guys where we're at, kind of show you what's going on in the macro environment that could also be affecting Tesla right now as well, and what other things we could see changing. And are we going to turn around? Are we going to turn around anytime soon? Or are we going to continue this downward trend? So we'll dive right into this right now. All right, so looking at the charts, again, we ended up finishing green today. I mean, basically flat, barely green at 394.94, closing under that $400 mark. Now, $400 is always going to be a psychological barrier, whether it's going to be a support or a resistance line. And right now we are underneath that $400 line. So last week we were discussing how we were coming down and we came up to this $450 level and bounced down. And I was like, if we bounce again, I want to see us come above that 450 at least to make a higher high. And it did not make that. It stopped here, and the high is now at 424, and we've been making lower lows as well. For anyone who doesn't know, just to get a little education, the lows here, when you start making a lower low and a lower high, this creates that downward channel that we are currently on. And of course, you see it as a dead cat bounce, came down, recovered a little bit, but just not as high as it was before, came down lower than it was before, then bounced back up, but just not as high as it was before, and it's bouncing down again. Now, we had seen this in a lot of stocks that went through 2022, and Tesla was no different. And now this here is kind of a smaller version of it over 3 weeks. So we just need to pay attention. So right now, closing at this 394.94. Where are we going to go from here? Well, the fear and greed index is at a 32. That is in the fear range. Last week, we were at a 27, also in fear. We kind of bounced up and then came back down a little bit more in fear. So the question is going to be, do we continue dropping further and then we come down even more into extreme fear, or do we bounce and continue to go up from here? Tesla is kind of following that trend, and we've been seeing that happening in a few other areas as well. And just looking at the QQQ, it is also not as exaggerated as Tesla, but it's definitely been on a dead cat bounce downward trend as well. Here you go. Here's bouncing down, a lower high, a lower low, and it didn't really close at a lower low. It was a little bit higher here. So this here might be kind of consolidating into a bull flag and then maybe breaking out or breaking down. We just need to pay attention because there's a lot of things that are going to be going on in the next couple of weeks, which we'll discuss shortly. And then looking at the S&P 500, following the NASDAQ very closely as well, kind of consolidating in this range right here. And now a lot of times you see this between the two currently because the weighting is so heavy for those top 10 stocks that it's kind of the same as the NASDAQ. So you kind of see a similar pattern between the two. So now getting back to Tesla, of course, another reason why we saw the further pull down was because of the fact that we got those delivery numbers that came in lower than expected. And so that drew us down a little bit further. And then we're continuing this downward trend here. So now the next thing we're going to pay attention to is where are we going? So we're at the 394.94. So we want to make sure that we do not close below 378.70. If we close below 378.70, I will be paying attention to this $358 gap here. And now below that, we do have a couple other gaps that are relatively close, going down to that 324 mark. So this is where I'm paying attention to here. Again, I don't know which way we're going to go one way or the other, but if we do see it end up closing below 378, pay attention to even further down below because we need to break that downward trend. In order to break that downward trend, we need to start making higher lows and higher highs. That's how we're going to break it. Right now, the only way we can hope is if we bounce from here and then come back up, and we need to close above 422. Then we can say we're starting to potentially form an upward trend, or at least we've broken the downward trend. So that's what we're going to be paying attention to as we go forward here. Looking at the RSI at 48, we're right in the middle. So it's not like we're at an oversold range. So despite the fact that we're in fear category when it comes to the entire market, we are not in oversold range when it comes to Tesla specifically. So we can definitely fall down further from here. So I'm anticipating, and I've said it before, I do think we're going to fill this $218 gap that goes back to the earnings that we had after Q3. So I do definitely think that we're going to fill the gap here at 255 that goes back to the election. I think all of the, Trump running stocks that we saw that boomed after the election are going to end up coming down back to these levels here. There was a lot of sentiment that was built into it. I mean, looking at Tesla here, it jumped up on earnings, which was justified, but the earnings itself just kind of marked a bottom when it came to margins as we started to come back up from there. And that was the announcement of the Model Q. But some of the realities about what's going on with the Model Q are starting to come out. Troy Tesla has been discussing a lot of what's going on in the company itself and what we can expect for deliveries this year. And I don't think it's going to be as exciting as a lot of people think it's going to be based upon what Troy is saying. So again, just looking at the charts alone, and I know long-term investors, it doesn't really matter, but if you're trying to understand and justify, where we're going to go from here, or if you're looking for a buying opportunity, pay attention to those levels. That 378 level is what I'm paying attention to next. If we come down below that and close below that, I'm going to be looking lower to those gaps. If we end up closing above 422, then I can start looking at, are we going to start creating an upward trend and then go above that $450 level? So that's where I'm looking at when it comes to the charts. But then looking at what's going on with the company and which way we could move based upon what's happening in the economy, what's happening with Tesla. In the next 2 weeks, we've got Trump getting inaugurated on January 20th. We've got CPI data that's coming out next week, and inflation right now is something that's kind of back on the radar for a lot of people in the market, especially with Trump potentially putting in tariffs, making the market get concerned about stagflation. We've got the jobs report that's coming out on Friday. That could also spell some news for the entire market to pull down. And if the entire market pulls down, Tesla will end up coming with it. And then we've got earnings season starting up at the end of the month as well. So in order, we've got Friday's the big one. That's going to be the jobs report. The market is closed tomorrow, so pay attention to that as well, because being a mixed up week, sort of like we've had for the last 2 weeks, the market's going to be closed tomorrow due to Jimmy Carter passing away. So they're going to honor him. The market's going to be closed. And then we'll come back on Friday with the jobs report and just basically a 1 day of trading before the weekend. So Friday could be a bit wild just because of the situation that's going on. So that alone could end up having us drop down below 378, especially if we get a bad jobs number. If we get a good jobs report and we end up coming up, again, I'll be looking to see us close above 422. So then after that, we're going to have next week the CPI data coming out on Wednesday. So again, based upon what we get from the jobs report, if we're showing some inflation signs again, not so good. So it sounds like a lot of companies may have pulled forward a lot of purchasing into Q4, anticipating some of these tariffs coming in because they don't want to have to pay those tariffs. They want to have that stock on hand. So they pulled that forward. That could end up causing a little bit of inflation, but then end up causing some deflation down the road. Just something that we'll pay attention to what's going on next week. We'll get more information about that on the Q4 earnings, because on those Q4 earnings, they're going to discuss a lot of what they did for purchases, and we'll see that in the earnings reports. So then on January 20th, Trump gets inaugurated, and then we go and see what's he going to be doing for executive orders. Is he going to be making some big changes right away? Chances are he would be, so that could be changing things as well. And then we have earnings, and Tesla specifically has their earnings on January 29th. So the next 3 weeks could really decide whether we're going to continue coming down, fill those gaps down below us, or reverse this trend and go back up. Again, gaps fill 9 out of 10 times. There's a ton of gaps that are below us. There's a good chance, I think, that we end up coming down. Do we do it now or do we wait? That's a big question, because if we end up going higher from here, that means that we might end up pulling down even further to fill those gaps later. I kind of would rather fill those gaps now just to get it over and done with and then go back up. Again, we don't have to fill them either. Maybe we don't fill them at all, but I kind of have a feeling that we are going to end up filling these gaps. So that's what I'm paying attention to over the next 3 weeks when it comes to Tesla, seeing what's going on with the charts, seeing the pattern and the trend that we're on in this downward trend, seeing what's going on in the macro environment. I think there's just a lot of uncertainty that's going on both between the macro and what's going on with Tesla. When you're looking at Tesla itself for the longer term over the course of the year as to how we could trend for the whole entire year, chances are the entire market could have a very similar year this year that we did to 2022 and have a massive drawdown. I don't know if it's going to be as exaggerated as we saw in 2022, but we may see a rubber banding down, maybe not as far, maybe kind of creating a swing down, but like a long-term, like 10-year upward trend. So we'll make a higher low than we made in 2022, but it's still going to pull us down significantly further. that could potentially happen in the entire market this year. So again, with Tesla, we wouldn't pull down to that $100 level, but maybe we fill that gap at 144. Again, that to me is like a worst case scenario, but seeing the trends that are going on, its potential, and with Tesla specifically, with the Model Q coming out, Troy Tesla broke it down based upon how their deliveries and their production had gone over the entire last year. Unless Tesla is working on something behind the scenes that a lot of people don't know about, which is highly unlikely because they're pretty transparent with a lot of the stuff that they're working on. So looks like the production has been slowed down because demand hasn't been there. And if the Model Q coming out isn't going to be this massive demand bump because we're going to end up seeing a higher priced vehicle and we might end up losing the EV tax credits. So we probably have a $37,000 vehicle versus a $25,000 vehicle, which isn't going to give us that total addressable market that we were hoping for. And so sales might be higher, but they're not going to be as high as they were before. And getting to maybe 1.9 to 2 million is realistic for this year versus maybe a 2.5 million, which some people are looking at. Just because Elon had told us that we're looking at a potential 30% year over year delivery growth. Elon's been right before. Maybe he's right again this time. But in this case here, I truly don't know based upon what Troy Tesla is going over. And he called it 501,000 vehicles getting delivered for Q4 and ended up coming in at 497,000. So he was relatively close. Even on the conservative side, he was still high. So just things to pay attention to as we go through the course of this year. And again, as long-term bulls, as long as we think that Tesla's going to be doing well, and again, FSD aside, because FSD doesn't bring in current revenue right now, that's making a major impact. Even if it gets solved, it's not going to make that major impact until robo-taxis are going to be regulated and allowed on the road. Even then, trying to figure it out is going to be at least 18 months down the road before we can have a real number that's coming in when it comes to the robo-taxis. And then we don't actually have the cybercab hit the road until 2027, which is 2 years away. So it's 18 to 24 months before we see a real impact from anything from FSD that's going to be going on. And Wall Street doesn't look that far out when it comes to the next 12 months. They're giving the price targets for that time frame. That's why we could end up seeing that drawdown this year, despite the fact that Tesla is making advancements when it comes to FSD. So again, we'll discuss that further next week in the video that I'm going to be putting out, which is bulls versus perma bulls. But that's what we're going to be discussing. And again, it's nothing to say that we're not going to be bullish long term. It's just saying that in the next 12, 18 months or so, could be some uncertainty and could be some ugly times. And it could be macro environment and Tesla specifically related, combining together to make it even worse. So that's just my thoughts. Again, let me know your thoughts in the comments below where you think we're headed from here in the near term. Do you think we're going to end up coming down to fill those gaps by the end of the month? Let me know your thoughts. Thank you guys so much for watching. I appreciate all of your support. Have a great one.